Hello everyone. This is the pre-market report video for March 24th, 2023 in terms of Nifty and Bank Nifty. Yesterday, Nifty opened with a gap down of 50 points and within 15 minutes it dropped another 50 points. However, it quickly found the support and recovered all its losses in the next hour. Until 1:30 pm, Nifty more or less maintained its positive trend, but in the last 90 minutes, it again slid down by 125 points and closed below 17,100. Basically, it's so much volatile and snapped the 2-day positive run. Sector-wise, it was really mixed as the market was mainly supported by metal, FMCG and power sector. All others such as PSU banks and IT just dragged the market. So the overall market was not that bad. The advance decline ratio was around 2:3, which means for every 3 stocks decline, 2 stocks were advanced. Regarding institutional activities, after just 1 day of small buy, FII again turns net sellers. The net sold shares worth approximately 1000 crore rupees, while DII net bought shares worth approximately 1670 crore rupees. Moving on, after US Central Bank rate hike on Wednesday, yesterday Bank of England raised their respective interest rate by 0.25%. Then they too delivered a very hawkish statements which makes the UK market to trade really negative. However, other European market closed flat or positive. Now coming to US, last night before their market opening, US Department of Labor released the data that the number of people filed for unemployment benefit claims. The number of people applied came as 1,91,000, which was again sharply lower than expected, which was over 2 lakhs. Despite this indication of very strong labor market and the Fed chairman's very hawkish speech, last night US market traded significantly positive for most of the day. It's exactly like Indian market. Most of the time it was positive, but in the end it erased most of its gains. So I'm guessing it's just a short covering, as it once all covered, there must be no bias, so it started to fall again. Anyway, that's my opinion, but in actual, there were other possible reasons as well. So first, let's look at the positive that supported the US market last night. Then we will discuss about the negative that dragged it down. Again, I'm saying this despite the Fed chairman's hawkish speech on Wednesday, and he repeatedly stated that he expects another 25 basis point rate hike. Somehow, CME Fed monitoring tool predicts over 70% probability that Fed will pause the interest rate hike in the upcoming FOMC meeting. I don't know the reason. I tried to find it, but I couldn't. It's really very surprising. Day before yesterday, Fed chairman said that he's going to increase another 25 basis point, but tool predicting no more rate hike. Anyway, this made all the tech stocks super duper bullish. Netflix increased over 9% as there was a rumor about the business tie-up negotiation with Apple, like a possible merger with Apple TV. And subsequently, this pushes the 10-year Treasury bond yield down by 2.5% to 3.41%. So this is positive. Now the negative. Again, small banks started to collapse as both Fed chairman and Janet Yellen said that there won't be any blanket insurance for depositors. Then another negativity last night was the market was expecting some oil production cut from OPEC plus countries as the oil price fell below $70 per barrel this week. However, 3 delegates from the oil producer group were reported to Reuters that in the next OPEC plus policy meeting on April 3rd, there won't be any oil production cut. This made the oil price to crash and thus the oil stocks in the US market. During the time of this video, WTI crude oil is trading near $69.5 per barrel and Brent crude oil was trading at $75.5 per barrel. In summary, last night in US market, tech stocks supported the market, but banks and energy drags that down. However, in the end, overall all closed positive. Dow Jones increased by 0.23%, S&P 500 increased by 0.3% and Nasdaq rallied by 1.01%. Then dollar index too marginally increased to 102.2. Regarding SGX Nifty, today at 3 am Indian Standard Time, it closed at 17,105. It's kind of indicating flat to positive opening. About Indian ADRs, after a long time, it closed really positive. Infosys ADR increased over 2%, ICICI Bank ADR up by 0.63%, whereas Wipro ADR and HDFC Bank ADR up by nearly 1%. So clearly, at present, the global momentum is not as bad as yesterday morning. To be frank, it's more of a positive. Anyway, moving to India specific info. Yesterday, after the market has, JP Morgan released the statement that Reliance Jio's cheap unlimited 5G postpaid plan has put the Airtel in a difficult spot. They mentioned that due to Jio's 5G plan, Airtel also has to introduce their own unlimited 5G plan. This kind of started a price war again and might cause the delay to the 5G monetization, which also expects to reduce the ARPU by 50 rupees for both Jio and Airtel. ARPU means average revenue per user. So for sure it's negative for both the companies, particularly for Airtel since Reliance price already dropped very significantly. However, Reliance still got the energy issue since all the energy stocks in US market last night crashed due to the low crude oil price. So high chance it may drop further. Next, I want to mention about Bharat Electronics. Yesterday, Indian Defence Ministry signed a contract with a company worth 3,700 crore rupees. And final info I like to share is about the banks. This weekend, there is a schedule for quarterly meeting between RBI, Indian government and all the bank officials. For that meeting, Indian government has requested PSU banks to submit the details of their bond portfolio since Finance Ministry wants to identify potential stress. So, based on that outcome, we might see the impact on Monday morning. As a summary, last night US market closed positive. Today morning SX Nifty indicating flat to positive opening. In terms of areas, they too bullish. However, there are some weakness in energy stocks including Reliance and also in Airtel. Moving on, the next topic about the items we need to look out for today. First, at 12:30 pm, there is a schedule for various UK related macro release such as retail sales. Then at 2 pm Indian Standard Time, various Germany related PMI data. Regarding India specific, at 5 pm Indian Standard Time, expecting RBI to release the bi-weekly Indian banks loan and deposit growth. But again, those impact we can see only on coming Monday. Coming to technical, on daily chart, Nifty forms the tweezer top pattern and a double top pattern on hourly chart, both indicating potential further weakness. As per candlestick analysis rules, tweezer top pattern means when the highs of two candles, the top of the candle occur at almost exactly the same level means. This formation is more meaningful, especially in the pullbacks, and it is the indication of shift in trend direction. So, it's kind of a weakness, thus Nifty might slip to the support zone 16,970. However, it expects to resume the pullback in the next few days with the initial hurdle on 17,200 and further resistance at 17,430. Again, if Nifty didn't take the support at 16,970 and if it falls below 16,950 means, then the uptrend will be vulnerable. Regarding Bank Nifty, on the daily chart, it forms a bearish candle with a long upper shadow, which means indicating selling pressure at higher levels. Here, Bank Nifty needs to close above 40,000 to continue its upward move, since at present it's stuck in the range of 39,000 to 40,000. Now, breaking on either side will decide the trend move. One more thing, Bank Nifty has to close above the 40,200 mark for Nifty to gather the upside momentum. Overall, at present, both Nifty and Bank Nifty showing the signs of weakness and facing the resistance at higher levels. So, a decisive move above those resistance level may bring the strength, but further downside is possible if support levels are broken. Then on daily chart regarding moving average, Nifty again falls below all including 5-day moving average. Thus, as a summary for both moving average and technical indicator, it's a strong sell signal. Even RSI value drops from 42 to 38.2. In case of Bank Nifty, it's same as Nifty. Day before yesterday, it trades above 5-day moving average. Yesterday, it falls below. So, from sell signal, it turns to strong sell. Whereas, regarding technical indicator, Tuesday closing was strong sell indication. For Wednesday closing, it turned to buy. However, again yesterday, it turns to strong sell. It's a bit crazy, but it is what it is. Since yesterday was the options weekly expiry, so I believe open interest might give the false indication. So from pivot chart for Nifty, at present the immediate support is present at around 17,010 and strong support at 16,950. On the higher side, the immediate resistance to break is at 17,200. Then in terms of Bank Nifty, the support is present at around 39,140, whereas the immediate resistance is at 40,040 and the significant resistance is at 40,440. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I am not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.